Hello guys, welcome to another training video with Forex Trading Signal. This is Ahmed Al-Azaiza speaking with you. Today guys, we're gonna go to speak about the hook strategy, buttons and the continuation buttons in combination. So in this tutorial video, we're gonna go to combine for you the continuation button and with the hook strategy. So this will be very useful for you, and it will be a very powerful strategy, especially if you are having difficulty in predicting trade and you are a beginner. So stay with us, please. We will start in a moment. Welcome back, guys. In this strategy, we're gonna go to discuss the continuation buttons. We have discussed separately in different videos the flag button and the some of the buttons, the continuation button. However, this time we're gonna go to explain this continuation button in better way, and we will give you simple approach for the continuation buttons, so it will be easy to predict them, because sometimes the chart is difficult to understand and to draw such as buttons. So the continuation buttons is also similar button regardless of the shape, whether it's triangular or like pennant button, falling wedge, raising wedge, whatever. It's a button where it have three resistance, three supports, all of them, and they are acting on the same way. After the third resistance or after the third support, it will have the fourth one for a breakout. So this one sometimes difficult to predict. However, we're gonna go to give you with these in combination the hook strategy. So don't be surprised, this is a fish, yes, and this is a hook, and this is what we are going to learn today. Fishing hook strategy, and this will work in combination, in conjunction with continuation button. So stay with us, please. Now I want to teach you first hook strategy. I want to explain to you why we are saying hook. We are saying hook because the hook, it looks like our chart. So I have long distance here, long rod here, which is representing the oversell in this hook. So let's say that the price is here, starting from here, and start to fall sharply down. So this gives that this is candles, 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 and start to fall down. However, while it's falling down, the price will lose momentum, and the trader pushing the price down will lose a momentum. Then that is the time where you will see the price start to turn and make curve. Now, oversell and slowing down on selling, it's indicating for us that pressure sell is going to be weak, and trader, they are going to be exhausted. So however, when the curve continue complete, the price will reach a point in the hook where the price cannot break a support level, because all these people here selling, they have sold everything they want to sell, and they have stopped, they have been exhausted. Now the price start to make the curve. Now this area, in this area, that is where the buyer has put their head, and they have started to buy the assets here, or the gold. Let's say, let's take a gold as an example. So in this area, we are placing our buy. Then on the top of the hook, we are placing our sell. So this hook, it's look like the chart which we are going to explain now. That's why we call this strategy is the hook strategy, fishing. So this is our button number one. So price coming from top, sell, 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 curve, then buyer putting their head in the market, then buy, then sell from the top. So let's see this. This is applicable for buy or sell. Buy or sell. So you might have price extended from bottom going top, then price started to retrace back, then we are selling and buying. So let's discuss this. This will work in conjunction with the continuation button. But however, let's discuss the hook on the chart first. So this is the chart, guys, and you can see that here, this is the long distance. This is where the price has significantly fell down, and this is the area where the price has reached here and did not break out, did not break this point. And this is where we can see, or we can say, this is a support level. Then the prices start to bounce back. Then there is two resistance level, then break in here, then we are placing our buy here, then we are selling here, then we are continuing down. So let's discuss this in details. So now oversell, price coming to this point, and this point we call it point A, point A. Now price has made a resistance here, try to push up, but made resistance here, and we call this point P. Now in order to complete our hook button, we need to have point C. So we can see that this candle has made the point C. So point B and point C are resistance point. However, point A is support point. Point E is the area where I want to place my stop loss, and point B and C, the area where I want to wait, breakout, and put a buy setup. Now, this is also applicable for the buy setup. This is sell setup, and this is applicable for buy setup. If you invert this chart upside down, you will be having the sell setup. So point P and C in that case will be support level, and point E will be resistance level, because you are inverting the chart. However, now the other condition, after the 3 points, the other condition, I need to see change in color. What does it mean? When I have oversell, those candles, they were red, and pushing down. Then after that, I have started to see green and resistance. This is for the oversell. Overbought, it will be green, then red and support, point B and C. So here started to see change in color, and started to see that there is a neckline on point B and C. So the moment I have a breakout in this candle here, I drill down to lower time frame, and I find entry here. This is my buy setup. After my buy setup, I place my stop loss on point A. Then after that, I will go and target the maximum retracement 50 Fibonacci. So this will be my sell after taking profit 50% Fibonacci, because you remember we have discussed the depth of the retracement after a breakout or oversell. So oversell, depth of retracement 50%, I take it. Then I will continue, because there will be continuation button, and in a while I'll explain how to combine this with the continuation button. Now, how do we calculate our take profit? Take profit number 1, we'll take it here. It's 23% Fibonacci. Take profit number 2, it is Fibonacci 38%. Take profit number 3, it's Fibonacci retracement 50%. So Fibonacci we measure from this area to this area, then you will be having Fibonacci. I will show you the Fibonacci level on the chart after completing the explanation. Now, for the sell setup here, after the retracement 50%, you see, came down, this is 50%. After taking my buy, sell from 50%, then my take profit 1 is 50% from this area, from this distance to this distance, 50%. Then my second take profit is 75% here. So this is how I trade this. Now, if you see this, you will be having 5 take profits. 5. 3 for buy, 2 for sell. Now, you can put third one for sell and wait continuation button to break up. And this is what we are going to explain. Now, in this case, you might have those type of candle acting here, so it's not important, but here in this area, it doesn't matter whether it's doji bar, bearish engulfing bar, bullish engulfing bar, whatever. The thing that matters for me, point A, point B, and point C, and after oversold, or overbought. This is the most important thing because this is oversold chart and there is similar overbought chart. So hopefully you have understood this. Now, how to combine this hook strategy with the continuation button? We all have studied the continuation button that it's making 1, 2, 3 resistance, then it's either breaking up or down. Okay. However, how this hook strategy works with continuation button? This is very important. Be careful. Listen to this. Now, if I have the hook here, what is this? This is my point A. All right, this is my stop loss. So oversold, then point A and my stop loss. Then here in this area, before the formation of the button, in this area, I have point B, one candle like this here, and it's green. Then point C on the same level, hitting the same resistance. Then I have here my stop loss, and here is my neckline. So if the price break above this neckline, I'm going to place my buy here. So tell me, where is my take profit? So Fibonacci from here to here, Fibonacci, and Fibonacci 23, my first take profit, Fibonacci 38 here, my second take profit, Fibonacci 50, my third take profit. And this is, guys, the first resistance of the continuation pattern. Oh my God. Hawk, you have placed your buy setup. You are taking all this money from here. This is the oversell. This is the retracement 50%, the depth of the retracement. And this is the first resistance 50%. And now you started to form the continuation button because it is breaking and it has to continue. So you are having your sell setup from this area. So imagine when the price will break down, what will happen to your sell setup? It will bang money. So you are removing from this sell setup 2 take profit, one 50%, second one 75%, and we are putting B on the third and continuing with the continuation button. So you see, guys, how the hawk walk with the continuation button. Of course, the continuation button, it doesn't matter whether it's symmetrical, triangular, or raising wedge, falling wedge, flag, whatever. My worry is only the hawk and when to hawk the price at buy and when to hawk it at sell before the formation of the button. So I can trade the button before the formation of the button. That is the intelligent thing. So now let's discuss how you can make your watch list. Now, in the watch list, you need to have a checkbox. Rule number 1, regardless of the time frame I have put here, you have to have market strong movement, sharply oversold or overbuy, breakout or without a breakout, after breakout or without a breakout. So I want the price to be sharply falling either down or raising up sharply. So minimum of 5 or 6 candle or 4 long candle or 3 long candle. Okay, normally on the gold, it's the distance will be from $10 to $25. It depends. So on high time frame, either 50 minutes, half an hour, 5 minutes, whatever the time frame, when you have oversold, you need to see then the highest level of the price or the lowest level of the price. So price is falling down, you need to see where is the lowest level of the price, and you need to see that the price started to slow down while it's going down or slow down while it's going up. So making the curve or making the curve. So now, after the price is slowing down on the hawk, if you remember the hawk, first candle, stick rejection formation and bottom formation coming out. That is the area where we said it is going to reverse, and at that area we will be having our stop loss. So candles will play point A, B, C. Point A, B, C, resistance and support levels. So if it's overbought, point A will be resistance. Point B and C will be support. If it is oversold down, point A will be the support level wherever you want to put your stop loss, and point B and C will be the neckline wherever you want to place buy. Then one support equal A and two resistance equal B and C for the buy setup, or one resistance equal A and two supports equal B and C for the sell setup. This is what we have said. If I have overbought and the curve is like this, then you A, then B, C. So the BC will be support level, the A will be resistance level. However, if I am selling down, then curve, then A is support level and B and C is the neckline. So let's continue. Now changing the color, the candle, we were red oversold, now green buyers, they are putting their head in the market. Now breakout of the neckline B and C, whether it's support or it's a resistance for overbuy or oversold, and the lower point, point A is the stop loss, whether it's a resistance or stop. Last thing, take a profit number 123 Fibonacci 38, TB3 is Fibonacci 50. Then for the B, you can be your entry after take profit number 2. Then after that, you're going to go to have 70% Fibonacci from the sell setup of the continuation button. So number one, guys, if you want to trade properly, number one, rule number, price has to be oversold or overbought. This is condition number one. If you have oversell and you have the hook appearing, then you place straight away your buy setup here on the point A and B and your stop loss here and buy. The moment you see the phase resistance appearing here with the candlestick formation, then you place sell, and this sell should be on 50% retracement. Depth of retracement 50%. So this is 100% up to here, from here to here, and this is supposed to be 50%. Then after that, the moment you put the hook, then the hook is starting here, and this is your sell setup in this area, sell setup. Then you have sell here, then it started to form the triangular or the raising wedge or the flag, whatever. Then you will be having the breakout. The breakout down is a continuation button, and you will continue with the trend. So from the sell setup, I take two take a profit and I hold the third one for long term, but I be always I be here, or I put my stop loss on the top. So I hope that you have understood this. I hope that you have understood the checklist. Now let's go to the chart and explain nicely the hook setup. So this is, guys, here. This is what we are saying. This is the hook setup, and this is the button here. This is the nice formation of the button. So if I go here, this is point A in this area. So this is point A, right? So this is oversold red, too much sell pressure. Then buyer coming here, change in the color. Then another candle here, point B and point C. Let me put a line here. Point A, point C. Then we are breaking in this candle. Then this is our buy setup. Then rep, we are taking all those things. If you count Fibonacci retracement, you measure from here to here. 23 take a profit number 1, 38 take a profit number 2. However, it did not reach take a profit number 3, 50%. So it did hit our B. So no problem. But however, we have sold from 38. We have sold here because we have this formation of the candle. So we have sold here. So point A, point C, point B, and we have sold here, and it's continuing to break down. So you see, this is the hook here. This is the hook. Let me do it like this. So this is the hook, guys, and this is the continuation button. So you are taking here, guys. So this is the hook strategy. So point A, B, C, then A, B, C, then sell, buy. So this is the hook. With that, you are also having the breakout setup. So now you have traded this continuation button and the hook strategy from every angle. So this is powerful strategy for scalping. If you are interested in this, then this will be wonderful for you. Now, example for the hook. So this is, guys, here the hook example. So this is bearish raising wedge, and this is the oversell, and this is point A, and this is here point B and C, and this is a breakout, and we are taking buy, then we are selling from here and continuing and breaking down and continuing with the price. So we take from these 75% here, you see 75%, we close it here, and we take from these here 50% from this, and these 75% from this. So this is the hook, this one is this one, and the button you will continue when it is breaking down. So this is how I sometimes enter early than the button. So now this is the hook again. You can see this is the price moving down, going up. So my point A, my take a profit, sell setup, down. I'm taking 75% here, then finish, go up, down, breakout. I'm continuing with the button. So I have traded the button and I have traded the hook. So this is the combination. Nobody knows this. So now, guys, if you are happy with this video, if you have understood this video, and if you have understood how to fish the gold, please subscribe to our channel, share this video maximum, share it with your friend, press the like button, and make it visible to all your friends. Thank you very much, and see you in next training video.